well, everything I thought I was going to get from gold is going to Bitcoin. And so if I basically invested half my portfolio in gold and half in Bitcoin, half the portfolio works, half doesn't work. And if I have 75% in gold and 25% in Bitcoin, or 98% in gold and 2% in Bitcoin, well, 2% works, 98% doesn't work. I think that the only reason that people haven't sold all their monetary gold and bought Bitcoin is ignorance, fear, uncertainty. Like as the fear, uncertainty, and doubt disappears, then it seems pretty obvious that the $10 trillion that's sitting in gold should that energy should drain into Bitcoin, and Bitcoin should grow at least to the monetary value of gold and then beyond, because the reasons people buy gold are they want a hard to debase store of value, and Bitcoin is everything that gold is but better. And so the only people that are holding gold are people that just don't understand Bitcoin, or they don't trust it because it's new. Because so there's a generational change. As generations change, they'll start to trust it. And then there's an educational component. But you can see right now, if you go back 6 months and look at the price of gold 6 months ago versus today, it's gone nowhere. And go back 6 months, look at the price of Bitcoin versus today, it's up by like nearly a factor of 4. And so at some point, the price becomes the educator, right? The educational catalyst. And all of the hedge funds that are holding gold and Bitcoin, they're holding gold because they want a store of value against currency debasement and uncertainty. They're realizing the gold didn't work that well. Or at least as they start to compare it to Bitcoin, they're like, well, everything I thought I was going to get from gold is going to Bitcoin. And so if I basically invested half my portfolio in gold and half in Bitcoin, half the portfolio works, half doesn't work. And if I have 75% in gold and 25% in Bitcoin, or 98% in gold and 2% in Bitcoin, well, 2% works, 98% doesn't work. And so there's an entire generation of macroeconomic investors this year in the last 12 months. I think they dipped their toe into Bitcoin and they had a good experience, and they had a bad experience with gold. And so the logical thing to do is you rebalance your portfolio in the coming year, and you increase your exposure to Bitcoin and you decrease your exposure to gold. And of course, if you reason from first principles, like people, in the community that are thinking hard about it, their conclusion is, well, 100% of my portfolio ought to go into Bitcoin and 0% into gold. Why would you invest in an antiquated, obsolete store of value that's defective? Like, why would you put any money? It's like basically, I have wooden ships and I have steel ships. And 100 years ago, people had wooden ships. And it worked 100 years ago because there was no steel, but now we have steel ships. Now, why would you have half your Navy be wooden ships and the other half be steel ships in the modern era? It makes no sense.
It's true, yeah. But in the end of the day, gold still has like a 5,000 years history. So do you think this 5,000 years, or like as a medium of exchange or as a store of value, do you think this history is going to be obsolete and Bitcoin is completely going to take over?
Wooden ships are 5,000 years old. And how many naval aircraft carriers are made of wood? By the way, like we didn't have airplanes for 5,000 years. Everyone that ever went between Europe and the US went on a wooden ship for 500 years. And now how many people go on wooden ships today? Like we had horses. How many people ride horses? There are plenty of things in the world that are 5,000 years old, right? By the way, dying of an infection because there are no antibiotics, that's 500,000 years old. People have been dying without antibiotics for hundreds of thousands of years. Would you use antibiotics if you got sick and it was going to save your life? Penicillin is not 100 years old. You know, for 1 billion people died of tuberculosis over the last 5,000 years. And we solved it with penicillin. Are you going to tell me that you don't want to use the new cure because it's 5,000 years old honey cure is the right way to do it? I mean, the truth is, saying something's 5,000 years old is the same as just saying, I just choose not to think about the matter. You know, for 5,000 years before we had guns, we had bows and arrows. How many people bring a bow and arrow to a fight with a person with a gun? That's 5,000-year-old proven technology too. They're all silly, right? I mean, they're silly notions. We used to do it another way, and now we have a new way. But I refuse to learn the new way because it's the new way. I think that demonetizing gold gets you to 500,000, and that's simply pulling all the monetary energy off of the gold rock from gold bugs who believe that gold is a store of value and a safe haven. But it's important to note there are a lot of organizations and a lot of investors that don't use gold as their safe haven. They use government debt, sovereign debt. And so cash is a safe haven, and sovereign debt is a safe haven. And another safe haven people use as a store of value is an index fund, bond index funds and stock index funds, like the Russell 2000, the S&P 500, the Dow index. So all told, I think there's between $300 and $400 trillion worth of fiat instruments, cash, debt, stock, commercial real estate indexes, something in that range. They're all, if you look at all of that, half of that monetary energy, maybe more, between 50 and 75%, is simply seeking a store of value as a container. Like when I buy the S&P 500 index or the Vanguard fund, I'm not buying it because I equally love all 500 S&P stocks equally in proportion to their market caps. That's not why I bought the index. I bought the index because I had $1 million and I knew if it was cash, it would be debased in purchasing power. And so I needed to put it into something which was going to return more than the economic hurdle rate or the cost of capital. So some people choose to preserve their wealth by investing in gold. Some people choose to preserve their wealth by buying land, a land bank. I'm just going to buy a bunch of farmland. I don't love it. I just bought it. Some people choose to preserve their wealth by buying debt. Like there's like $100 trillion worth of sovereign debt, right? 10-year treasuries, 30-year treasuries, 3-year, 1-year treasuries. There's like $17 trillion worth of debt that's negative yielding, I think the last number I saw. Why would you buy a bond that you have to pay to own? Right? Isn't the obvious answer? It's a safe haven. Right? I don't want to bury the cash. I don't want to hold cash. I don't want to bury the cash under my mattress. I don't want to hold metal. And so I'll buy a bond until I figure out what to do. So ultimately, the amount of monetary energy in the world that's looking for a safe haven store of value is got to be between 100 trillion and 250 trillion. Like, why not all of it? Like, why not 300 trillion or 350 trillion? If whatever the total sum of everything. Well, the answer is at the right price, I would own a stock because I believe in the stock. Like, for example, Tesla. If you bought Tesla at the beginning of the year, it went up by a factor of 5. And if you love Tesla and if you believe it's a growth stock, then you invest. You're making an investment decision. I might make an investment decision in a stock that I thought was going to grow faster than the cost of capital. If you believe that a stock can grow its revenues and its cash flows more than 20% a year, you should probably own the stock, right? If the stock is going to outperform the cost of capital. If you came to me and you asked for a loan and you were going to erect a hospital, and I lived in the city and I had kids and we needed a hospital and I was a wealthy person, I would give you the loan. I would buy the bond so that you could build a hospital so that my family doesn't die if they need the hospital. So sometimes creditors would issue credit because they have a passionate belief in the project. And equity investors would invest because they have a passionate belief. That's investment, and that's true crediting. I mean, credit and equity investments. And the same is true with real estate, right? I might buy real estate to live in. I love it. Or buy a commercial office building to put my company in, or a factory. On the other hand, when I'm buying the index of 187 companies I never heard of that yields me 2% or 3%, I'm just looking for a store of value. So that's a long-winded answer to the question, which is, is Bitcoin worth more than the value of gold? And the answer is, yeah.